Aloha Internet. Welcome to the Bubbles Stock Market Open Show for Tuesday, October 28th, 2025. This is being recorded at 8:02 a.m. Eastern Standard Time. As always, consider starting your day with a little bit of bookkeeping. Consider using this free monthly budget thing from Gmail and go in. It is the 28th. Make sure you figuring out, you know what day it is. You can double click this here. Oops, that's not. You can do that, but there we go. Shrink that down. So you're logging into your accounts, you're writing down whatever amount. Let's say you have a checking account. Keep things real easy. You have a checking account, you're putting that down, or maybe you're putting how much cash you have in your brokerage account down. What I've been doing lately is I put my cash in my brokerage account here, how much buying power I'm using here, checking account here, another checking account here, and then third one, maybe I start going into my most used credit card. What's my outstanding? Let's say if I paid off my balance, which I pay off every time I post. So I'm using my credit cards more like a debit card as far as how quickly the cash is coming out of my checking account. It would be faster to use a debit card, but I don't want to use a debit card. I just want to pay off I want to use the credit card and pay off whatever I bought as soon as it posts. So like once a week, I'm paying down my credit cards roughly, sometimes a little more depending on how much I'm using. But let's say I just paid it off, so my balance is zero, but I see I have a total of 300 I need to it's going to be posting. And then so I put it in parentheses. I know 300 is going to be subtracted out of whatever checking account that I make that payment out of. Let's just make this math real easy. Let's say there was $1,000 in that account, and I know 300 is is coming out. So that means once this post, once this post, I'm going to take 300 from here and put it here, so I know that I really, even though there's 1,000 in there right now, what I'm actually dealing with when things get moved around is 700 left in here. And doing this, it really dials in how much money are you spending, how much money do you have, where's it at, and how to move the money flow around. If you have a desire to be a full-time trader someday, this will probably help you out. If you have a desire just to be good with your finances, this will probably help you out. If you are doing something that's better than this already, then keep doing what you're doing. But that is something that to get started on and figuring out how much money do I normally spend in a month. Then you can figure out, what am I spending it on? Can I take it? Do I need to spend it on everything? Do I want to? How am I going to do this? So that's step one of trading for a living. You have to really know how much you need to live on and what you're spending it on and how you can maneuver that around. So consider starting that as a habit and be really could be pretty helpful for you. Let's take a look at the market risk indicator, MMRI. See, the MMRI, I think, went down a little bit. Let's see, posted here on this chart. The last update was yesterday at, yes, going down just a little bit. And I keep talking about this, that if the market is crashing, that if the market is correcting or going down, but this is going down, the market's going up and this is going up. Like, this seems to be a pretty good gauge of risk, but it's not really gauging when the market's going to crash, just like maybe if what would be the severity, what's the kind of underlying underlying likelihood for a big crash if something happens, or if something starts pulling down, how likely is it to keep going down? If the stocks start pulling down and you see this is moving up, and depending on where it's moving up from, right? If it's down here, which is labeled green here, but white over here. If it's down here from 50 to 100 and it's moving up when the stock market is crashing down, well, it could keep moving up, but it's definitely different than if it's already in here into the high risk in moving up. So it's a good, I think it's a good tool to use. It seems since it's came out like 3, 5 years ago, something like that, I've been paying attention to it and it seems to work pretty well. So we're kind of slowly going down in risk, but right at the kind of right around the same area. We're just kind of in here, but slowly ticking down, a little up and down. But overall, you can see since 2025, it's overall been going down. It's based on the dollar, the DXY, which is measuring the dollar against a basket of other currencies, and the U.S. 10-year Treasury. Buffett indicator is still overall suggesting that stocks overall are overpriced. And because of the unemployment rate has still not been updated, and it might be easy to say, well, that's because of the government shutdown. Then we would want to look at when did the government shutdown happen? Because the last update that we got here, pardon me, that we have here is from August 2025. Did the government shutdown start in August? I don't think so. So yeah, it's a nice thing to blame it on, but it should have been updated, I guess, before. I don't know. I don't know how often they update it, but so so this gives us an indication of how many people are not working. And why would we want to know that? For two reasons that I can think of. There's probably some other reasons that I'm not thinking of at the moment, but one reason is that there's this when people are employed, they tend to contribute to retirement plans and things like this. So money is flowing into the stock market. Not only is that happening, but money is just flowing more around the economy. When people have a job, they tend to make money and they tend to spend that money on things. If they don't have any money coming in, it's hard to spend. It's hard to spend $0. If zero is coming in, it's hard to spend 100 if none came in. So then there's a certain amount of money that would, in theory, not be moving around into the economy, which may bring down the profitability of some of these companies. And in this old school kind of view of the market, you know, that has some logic. I just wonder, as I was talking about yesterday, if things have changed, but are the way that we're measuring this abstract thing called the market, if the abstract thing called the market changes, and and since it's abstract, we're using indicators to try to look at something that can't really be looked at the same way as you look at a cat. It's more of an abstract thing than a cat. A cat is a it's not made of concrete, but it's tangible. It's the solid thing that you can touch and look at. And even though cats can be big, there's not like a cat that starts over in Japan and ends over in Italy or Argentina. It's not that big where you can't see it at one time. The stock market is like that. You can't really see it at one time. So we use different indicators and different ways to try to forecast in look, not just forecast, but to see. So we can see in our mind's eye, obviously, an abstract vision in our mind, and then take that and try to forecast something into the future. Well, if the abstract thing has changed, then if it has, then what we're using to see the thing either needs to change, or at least the way that we're mentally looking at the indicator or the tool, maybe that needs to change. So perhaps, there's other way. I don't feel like I'm doing a really clear job of explaining it, but in my mind, I have a clear understanding of what I'm attempting to do, how I'm attempting to be more mentally flexible in my understanding, or my what I'm thinking that things are measuring and what those measurements might mean. So since that's not updating, I just did a quick 2025 layoff, and then layoff tracker kind of popped in, was getting filled in there. So I like this. So I just boom, I searched that to see what was going to come up, and I haven't figured out how to change this internet browser from Bing, but I don't particularly like it because it seems like it's usually a bunch of non-relevant. or somewhat relevant ads paid to be there before I get to where I want, like this ads. Maybe this one, let's see, partial sample layoff. I saw something in here. We can quickly see in here Amazon cuts 14,000 jobs and largest corporate layoff of 2025. That came out 2 hours ago. 3 days ago, Target, GM, Ford announced more layoffs as a total of U.S. job cuts for 2025 approaches. Not sure. And business, the business journals higher ed layoff tracker. Mass colleges, is that Massachusetts? Because a little period there. Massachusetts College, Mass College cuts more than 400 jobs. So I've been noticing this stuff for months, well before I ever thought about creating the spectacular bubble stock market show. There's just lots of articles about people being laid off, not having jobs. So will that ever show up here? I don't know. Do I think that the powers that be, um, obviously you've got more than one powers that be, and sometimes they might be competing with each other. But overall, does it benefit the powers that be to um, to produce accurate numbers? I don't think so. I think for the most part, the way most people work is they would rather sort of present numbers that support whatever their agenda is versus just presenting numbers and then going off tangible data and making agendas based on that to get some other outcome. But it seems like politicians and a lot of people, celebrities, people in general, probably even the firefighters, candlestick makers, to some degree, we want to get what we want, and we tend to function in life as far as let me present a case to get what I want versus let me look at the evidence and then figure out what I should do going forward from there. Who does that? Hardly anyone. Hardly anyone does that. It's something I think is a worthy thing to attempt to do for oneself. Is it easy? No, not really. Here's what we have going on for the current markets on the daily charts. We're looking at 1 month from left to right to see the stock market indices of the futures. Wow, Dow Jones is powerfully up this morning. But the other, we take a look at the S&P, we take a look at the Nasdaq. We see that the open and trading in the top 10% of that big bull candle. Now this one didn't really have a big bull candle. It did gap up, not as strong of a candle looking here, but this one is coming in. Now over here on the Russell, we had a sell-off day yesterday, even though it hit an all-time high, but it ended with a red candle, and now we're opening and trading in the bottom portion of that previous red candle. But to be noted, we are in the top section here of of um, of this little range that we have going on here. Even though the VIX has pulled down back to this 18 level, we'll see if it what it's going to do around there. Right now, it's obviously looking green. We got gold. Looks like maybe hitting some support around here at temporary support, permanent support. Not sure. We'll see, but it's at least hitting some temporary support right here around the 3,900. Same thing happening. Apparently, seems to be happening around here around 46 for silver, and because of the what has been happening with the price of gold and silver for the last maybe like 10, 20 years, I don't know, at least 5 years, like some amount of time. I think it's been like 10 or 20 years. I think there's because of this pullback, there's a lot of people already speculating that it's going to pull back further or something like this. The bull case for gold and silver is over, and it might be in the price action like temporarily. It might be in the price action forever. Actually, yeah, I guess there's some. It's worth at least saying. So I'm bringing out that other side, but I personally don't think there's going to be like this huge pullback forever, and I don't think either one of these are going to zero. Now, in the futures market, could futures contracts go to zero? We saw it happen with oil. Yeah, yeah, it could, but overall, something like gold or silver, is it something that is really going to go to zero? I don't think so. I don't think so. So I think what you should at least consider is, um, and also we can Bitcoin can kind of go into this category now as well, that something like gold and silver, it has a certain amount of intrinsic value, and it's almost like it has multiple purposes. So, for example, you could trade gold and silver, or either one. You could trade them in short-term durations, or you could trade them for some sort of capital gains. You could say, "Hey, I'm buying this because it's at this price, and I'm going to sell it when it's a higher price." And then you're basically using it like a lot of other trading vehicles. That's what we could do with a lot of these, almost anything in the stock market. That's what we're looking to do. We're looking to buy and sell things, or sell and buy things. We're looking to open and close positions and make money. So that's one way to look at gold. Like you can just, or gold, silver, Bitcoin, you can just play the price action. There's another way of looking at gold and silver, and actually people look at Bitcoin this way too, as you well might know, that they're not really looking to just play the short term price movement. They're buying it more for some sort of protection, hedge, insurance against, boom, the the currency risk. So if you are if you buy gold and silver, physical gold and silver, can you buy physical Bitcoin? No, but I guess you'd be buying it. I guess the equivalent of buying physical Bitcoin is your custody, self custody, custodying, whatever that is. You're doing that yourself versus like some sort of ETF type of thing, which you can do the same thing here. You could buy an ounce of gold, you can buy an ETF, you could buy a gold mining company. And so there's ways to play on both of these, but just be clear on what it is that you're trying to do with any of these assets. And I think if you are very clear on what you're doing with these assets, it's easier to filter out what is meaningful and what is noise for you personally. So there could be two people with two different use cases for these three assets, and certain news or certain things could affect them differently based on what they're doing. So if you're going to play in these, if you're active in these, be really clear on like what their use cases are and how you're particularly doing it. Because just because gold does, and silver, and I guess Bitcoin as well, just because any of these might make a really good inflation hedge or currency risk defense or anything like that, doesn't mean you have to use it that way. You could just you could just trade futures contracts, directional trade, getting that, going for that, like that delta. So be aware of that. Let's take a look at the what's happening in the pre-market right here. Take a look over here. We got S&P kind of moving up via SPY. See the VIX kind of moving down, getting close to that 15 and some change. Now, a lot of, I would imagine, speaking of, we got Bitcoin ETFs here. IBIT, which I don't think gives any dividends, but it has a wonderful, wonderful option chain every time I looked at it. Really, really easy to trade options and pretty lucrative. You can get premium. Last time I looked at it, far away from the money, I think, on each side. So it gives you a lot of different it's a lot of different opportunities to look at different trades on that. But again, just to be clear, if you're trade most of the time, if you are trading options on an instrument like this, you're not you're not buying Bitcoin. You're not really not holding the asset itself. It's going to be a bit different of a use case than if you're trying to hedge, inflation hedge or something like that with a particular asset. You could definitely make more money and things get more expensive as you bring in premium from selling options, or you're making capital gains from buying options, whatever the case may be. But that is this one over here doesn't have nearly as good of an option chain, even though I am selling cash secured put options on this, but they're a little difficult to deal with because they just don't have as much liquidity and demand, so they're not developed as much. It's not as much premium, especially as you go further away from the money, less strike prices, all these different things. But this has heck of a good monthly dividend payer. And a lot of these stocks look like they're kind of getting ready to float uh, towards the towards the top. MO, getting into a good buying zone for me. And look, we got it looks like our moving averages might start going down. I hope that's what happens. Speaking of ETF gold over here, GLD, we got this pullback, and you can do the same sort of speculation stuff. This option chain I don't think it's as good as IBIT. I think because of the volatility of Bitcoin, this tends to have a way better option chain. It's kind of like Tesla. Where did you go, Tesla? Tesla has a really good option chain as far away from the money. I think I've seen option chains for Tesla where there was 1 and 0 delta that where you could still get premium. It might not have been that great a premium, but gosh, 0 delta basically means there's zero chance of that event happening. If it's a put option and it has a 0 delta, it's basically saying from that metric, there's zero chance for the for the stock to expire below that strike price. Another way to say it is by that metric, there's a 100% chance for it to expire worthless. So when there's a 1% chance or a 100% chance for something to not happen and you can still get paid to ensure that event, I think that's a pretty good option chain. I don't see the same thing over on the GLD when I was looking at that. And so it really, the last thing I want to talk about, something that is kind of it definitely impacts trading in the markets, but it's probably not talked about very much. For example, I don't think any mainstream news organizations that are on TV are definitely going to talk about this in relationship to the stock market. And maybe some YouTube places would, not sure. But what it is when again we are dealing with an abstract thing here, an intangible thing. The stock market is more intangible than it is tangible. There's people trading from all over the world. There's different components outside of the stock market, like the debt market, that can affect the stock market. There's all these different things happening. So a lot of your actual uh, your actual performance in the stock market is really a mental, emotional thing versus some sort of physical thing. You can't really strong arm your way into winning in the stock market. It's not something that um, you can physically manipulate to gain advantage. Unlike whether it was on purpose or not on purpose, there was a big UFC fight over the weekend, and there was like a eye poke that caused big problem, right? And whether that was on purpose or not, if it was on purpose, it's a it's something you can physically do to try to sway the outcome, even though it's not supposed to happen. And so there's like that element isn't really there in the stock market. You can't really eye poke the market maker or whoever bought something, or you can't really threaten somebody to buy your stock, or otherwise you're going to do XYZ to them. Like none of this stuff really works. So you're dealing with you're not there's no physicality of this game. You're just dealing with mental and emotional things. So we hopefully by now is that we tend to be more emotionally driven creatures, beings, whatever the right word is, versus what is kind of easy as an easy comparison is the Vulcans from Star Trek. I'm not really a big Star Trek fan. I I'm not a Star Trek fan. I'm familiar with it. And there's this guy, Dr. Spock, that was his Vulcan back in the day. They probably got other characters since I watched a Star Trek episode several years ago. But these Vulcan characters, they they're unlike humans in regards to they're more like thinking like a computer. Apparently, they don't have any emotion. They're just reason and logic. So we humans, we're full of emotion. And so what can happen is that if our emotional and mental hygiene is not on par, then we are victim to whatever is there that we probably didn't proactively, consciously program inside of us. A lot of the stuff is just like randomness, like, hey, what family were you born into? Where were they at? What were they doing? And you have elements of that programming in there. All these different things that happen that were kind of out of your control, especially in the beginning stage. I don't know anyone that somehow was able to determine what family they were born in. And I get it. There's some very I guess there is some mystical way of thinking or a philosophical way of thinking, and I've heard about some evidence that if you're going through hypnosis and you've been taken back far enough, you can find that most people somehow choose who they're going to be born to or whatever. But even though like there's some people out there saying that, I don't have any conclusive data for that myself. I've never, fully studied it. So let's just assume that if that does or doesn't happen, that we don't have much control over it. So we'll kind of take that out of there. And for me, when I was like 2 years old, I didn't really have much control over my environment. When I was 4 years old, I didn't really have much more control over the environment. When I was 8 years old, it still is like as I'm gaining more control, my parents and my older family members and all these other things, they've got more control over my environment and what they're doing as well. So all these things, though, as we're growing up and even at older ages, we can have things happen to us putting that start kind of implanting more um, emotional reactivity into us. Maybe it's not that it's implanting more, but things are happening and we're emotional beings. So sometimes we end up having these emotional reactions that might not be logical. And so it's a it's a it's a psychology type of thing, and you're dealing with your own psychology. That is really the thing here, is you're dealing with your own psychology. I'm dealing with my own psychology 5 days a week, technically 7 days a week, but 5 days when the market's open, I'm confronted with it. 7 days a week, I'm confronted with it. Like something happens, I emotionally like it or don't like it, and my initial response is in relationship to whether I like it or don't like it. Then I need to kind of slow down and try to rethink: is this even though I initially don't like this, what's a let me look at it more. Let me have more of a clear distinction of reaction here. Let me make sure that this reaction is really what I want, or should I change this reaction? Not necessarily an easy thing to do. Not for me, at least. Hopefully, it is for you. So I say all that to bring up something that you can put into action while you're while you're learning to trade in the stock market. consider to just consider it. And if you like it and you want to go for it full blast, then go for it. But at minimum, just consider that things that you do in your life that you are embarrassed of or ashamed of, that is a mental, emotional type of thing. Embarrassed, ashamed. So if you're ashamed of something that you do, you're embarrassed about it. And it's easy to justify it's no, I'm not. So you have to get to a certain degree of honesty with yourself. If you are doing things that you are ashamed of or embarrassed of, I would just consider to try to eliminate those things because you are when we do those things, myself included, it's if it's generating embarrassment and shame, then we are experiencing these emotions of embarrassment and shame, and that's inside of us, and we're taking the inside of us to make decisions in the stock market. So if I'm living my life in such a way where I have some activities that I do that are shameful to me, then I'm producing shame inside of me. Maybe it gives me whatever the activity is. Like I can imagine some things that give you short term, or even it might be like somewhat of a long term as far as hours, short term as far as minutes, longer term as far as hours of some sort of satisfaction, relief, pleasure, or something. But in other aspects of your life, if there's an embarrassment, there's a shame about the same activity, it's there's something inside that is in some amount of disharmony. So I would just consider at least limiting, stopping, being aware of what sort of activities give you shame, and trying to limit as much internal noise as possible. So let's say, I'm going to go with it. I'm not married, I'm single. So I'm going to go with an example of a married person. Male, female, it doesn't really matter. But this married person, let's say, cheats on their spouse. There's, and the spouse doesn't know it, and this is something that they have to hide. So there's a certain amount of energy, mental energy, not only physical energy, of course you're doing it, but there's this mental energy afterwards, the need to cover up, need to hide. In that same energy that's happening is happening in the same space that you're using to make decisions on the stock market. So you're trying to make these great decisions on the stock market where you need to use incomplete information to try to make profitable, wise decisions while you're also making kind of unwise decisions. If it was a wise decision to be cheated on your spouse, why would you need to hide it? So you can justify, well, I need to hide it because of this and that and all this stuff, but the fact is you're still hiding it. So these two things kind of are not kind of, they're happening in the same space. They're happening in your mind and wherever you feel emotions in your chest, your stomach, they're happening inside of you, taking place. And to some degree, I believe this is going to influence how well you are going to be responding to subtle clues that your mind is giving you. Your intuition, when you're attempting to protect yourself by not losing money, and you're attempting to benefit yourself by making money. And and these are we're attempting to make these decisions from a place where we don't have complete information. We only really know for a fact afterwards. So in order to give yourself the best chance of being in tune with your own inner resources and being able to follow your intuition and understand what sort of hunches are and clues are coming to you from the inside, it would probably be wise to limit the amount of shame, self-loathing, hiding, these type of behaviors that are causing you to have emotions that would be contrary to the emotions that successful investing and speculation bring. In what I found for myself is that the stock market, even though I would have like this high degree of wanting to make money from the stock market, these things that I grew up with and behavior patterns and all these different stuff is more deeply rooted. When I was 2 years old, I wasn't thinking about making money with the stock market. But when I was 2 years old, I was being influenced by XYZ thing. which now here at 48 still impacts me and is kind of getting in the way of me making money in the stock market. I get it. It's very abstract. It's more philosophical. It could be, some people could view it as like totally wrong and bunch of BS, and that's great. I don't I don't need someone else to believe it in order for me to reap the benefit of it in my life. There could be the majority of people that do not reap the benefit of something that's true, and they could be getting adverse effects from it, and they could totally disbelieve whatever's happening. And at that same time, myself, you could be doing it, reaping the good benefits from it, while these other numbskulls aren't. It doesn't matter. Their results don't really in their results in the stock market don't really reflect or influence your results in the stock market. So I'm just putting it out there for consideration. I know it's not as stock market-ish as looking at delta or candlestick charts and all these other things, but your ability to make good decisions is probably way more important than just knowing the the um the legal terms and definitions of stock market stuff. It's just like lawyer. You could be a lawyer, you can know all these legal terms and definitions and stuff, and you could still go on a rampage and lose control of your emotions and do some weird stuff, even though there's that there's these different legalities involved with it. So hold it there for your consideration, and I wish you good luck with that. So we'll be seeing what's going on with the stock market today, and I will talk to you later. Aloha.